rich, full-bodied wine, sensibly priced at $1 a jug. And now for a little magic, I will make this jug disappear.
Hey everyone, Tim Knight here. First, a thank you. I was belly aching about ad revenue, and I definitely see a pickup in that. I think part of the reason is the folks of you that you folks out there turned ad block off, which I appreciate. In case you missed it, if you're running ad block, like if you're on Firefox, I think has it. Just please, just go down to the lower left corner, click on that little stop sign. Well, it's hiding my drop-down menu here, but it says disable on slopeofhope.com, and if you click on that, then it'll become a gray stop sign, and life will be good because then you'll see ads. So thank you to those of you who have done that. I appreciate it, and to those of you who have not, I would appreciate it if you would, because otherwise I'll go hungry. No, not really. Anyway, but thank you for your support. And I can definitely see the difference. Let's move the chart down here to where you can see it. All right. So, interesting week. I had profitable 4 out of 5 days. Guess which one wasn't profitable? That's right, Thursday. But the cool thing for me was that back on Wednesday, I made a pretty good call about what I thought was next. On Wednesday, I'd spoken about a bounce up to, I thought it would get to like 1438 or so, but it did better than that. But a bounce nonetheless, after which time I thought we would weaken. And that, so far as what's happened, the last day of the quarter really played havoc with, I'll change this to just today. It was just nuts. Look at this. It's just bananas. We had, what is this, about a 15-point or so range. So we exploded higher yesterday, and then we fell, and then up again. So just messy. Even in the last bit of the day, we had this just wiggle waggle going on like crazy. So yeah, this was basically the Thursday Spain releases their budget rally, and this was the Spain stress test bank rally. So it was all about Spain the past couple of days. That's better reflected in the Euro chart. If we look over the past couple of days on this, you can see that we had this, I don't know what is so thrilling about the fact that Spain has a budget now, but they introduced their budget, and the Euro went zooming higher, and that kind of fell to pieces this morning, that is Friday morning. Then we got a smaller rally based on the so-called stress test, which, if you've looked at them at all, is the most like rose-colored glasses kind of stress test you might imagine. The worst case scenario they're envisioning is like an economy vastly better than exists right this second. So it's a work of fiction, total fantasy piece, a fiscal fantasy. The market seems to have discounted that to some degree, because after the goofy rally kind of faded away. So the entire Spain has a budget rally and hey, stress test passed rally have both been set aside, and we're pretty much back even lower than we were before any of that nonsense started kicking in. Now, the crucial thing with the euro is that I really would like to see us resume that wonderful downtrend we had been in for 14 solid months. Ever since late July, so that's about a little over 2 months have gone by that we've been kind of pushing higher, and it's been a pretty big rally. It's like 1,000 pips or something. So it'd be nice to not only see us kind of work its way back down to this level, but chop its way through this portion, because this is still a very nice large pattern. But this big rally has definitely splashed a lot of cold water on bearish picks, particularly, of course, the miners. But down a bit today, that's good. And as I'll show you in a moment, if I were to describe what I think is going to happen over the next 6 weeks, my guess is something along these lines. A sell-off, a continued sell-off, and a pretty aggressive sell-off, but nothing too dramatic. Maybe take us down, oh, well, when we get to the charts, we can look at the exact levels, but, enough to get excited about, but nothing cataclysmic. And then a big push up into the election, so a big relief rally, but not to new highs. And then after the election's out of the way and, Obama doesn't have any incentive to, fabricate anymore, then things will start really getting interesting. So I'm highly confident they're going to continue to spin things to win the election, but once that's done with, A, they won't have any reason to lie as much anymore, but B, and here's the really cool part, the Republicans are going to be pissed off. And if you think anybody's going to make any friendly deals about this fiscal cliff, you're wrong, my friend. You're wrong. They're going to be furious that this guy's another 4 years in office. It's going to be outright war, and we're going to have a front row seat. Now, going back to the ES, we did slip a bit today. Since we started the day off down 8, I was hoping for better things. But there's a couple of different goals you could set about with the S&P. The most modest goal, I think, would be down around 14, 15, something like that, which is only 20 points away. I mean, goodness, that could be a one-day drop. But that would peg kind of the apex of this ascending trend line as well as this trend line here. So that's probably not a bad initial target. Looking at the S&P 500 index, we can get somewhat more aggressive. Or can we? Let's take a close look. Let's bring the grid up. And I could see us chopping our way down to, maybe a little south of where we were in the summer. So let's call it about maybe 1390 or so. So that's obviously more aggressive. That's about 50 points as opposed to 20. But I will say that is just about the most wild-eyed ambitious I get right now. So if I were to kind of draw a path on this, it'd be working our way back, working our way down to about the 1400 level, somewhere around here where we had a lot of support, and a rally for God knows what reason, but who cares? Some kind of rally. It could be earnings, it could be QE12, I don't know, but so a rally. And then once we get past the election, then we snap this trend line. So, from my mouth to God's ears, is that how the saying goes? That's my wild ass guess. As far as the NASDAQ, interesting day on this one too. More weakness than we saw on the S&P. And as I had made mention in a post earlier on Friday, this is shaping up to be a pretty cool little head and shoulders pattern. I hate for you to think that head and shoulders is like the only thing I know. I mention it a lot these days. But I admit it's a bit of a favorite, and a lot of them are popping up, so that's why I keep pointing them out. But of course, this is a incomplete pattern. If we can break this level at about 2768, that would set us up for a 100-point drop on the NQ, which corresponds very nicely with the S&P chart I was showing you earlier, and a bounce back to the neckline would correspond very nicely with the notion of a bounce into the election. So that all the stars could line up. They could. But there's a very consistent theme as I look at the big ETFs right now, which is that we've broken what was breakout support, and I think the bulls took some damage this week. The diamonds never broke out of this big wedge, but I think the path is clear for a travel down to that lower trend line. IWM is still kind of ticking away at its trend line here. It's kind of at the cusp of doing so, but I don't think it'll have trouble. I'll go out on a limb and say I think Monday's going to be a pretty decent sell-off. And I say that knowing absolutely nothing about what's going to happen this weekend, but that's my supposition. and I'll mention as an aside that I definitely kind of goosed up my holdings. I'm actually up to about 75%, which is just about as high as I've gotten in a very long time, and it's all on the short side. As far as the spiders go, SPY, zooming in here, and this tells a very nice story. We zoom in a little more tightly. So we had that big breakout on QE3 day, and a little follow through, and some consolidation, finally a failure on the 25th, some follow through to that. So, the analog is this and this, like this is to this, as this is to this. So we had our follow through. And then yesterday, that is Thursday, push back beautifully to not only this trend line, but this horizontal line, and then started to ease back again today. I will say it again. I think that we have a pathway here to somewhere between 139 and 140. That's my game plan. It's not ambitious. It's not wave 3, whatever you want to call it. But, what is that? 3.5% or so? Well, I can work with that. I can do something with that. And at the risk of getting too god-awful repetitive with the IYR thing, it's such a pretty analog. It really is. Just, in a grid chart, and do that, and do this, and you're here. Now, this, of course, kind of doesn't line up with the more temperate drop that I just talked about. So, I don't know. I don't know if real estate will get singled out for a thrashing. I don't really think so, but it's just, my goodness. It's just such a good-looking chart. I just can't resist. I had other symbols to share, but I'm not going to because this is getting long-winded. I'll just show you the bonds as the last one. Some days I do okay with bonds, other days I don't. Friday I didn't. I went long TBT and lost a few $100 on that, and if I'd held on, I guess I would have made a couple $100. But setting aside my little loss there, it's still a good-looking chart. I think psychologically what I'm trying to combat here is trying to reconcile the prospect of a plunging bond market with a falling equity market, but could happen. It's a pretty bearish-looking chart. It really is. And, having said that, I don't have any position. Incredibly, I couldn't get an ETLT to short, which is almost a first, but this is looking like an interesting setup. If equities fall on Monday and this cuts through the trend line, I guess that kind of answers that question. If they both fall on Monday, then things get really interesting because people just assume that can't happen. Seems like science fiction. All right. Well, I'm gonna go wrap it up here. Thank you again for being part of Slope. Thank you again for allowing ads on the site and clicking them if they were to catch your eye. And I will see you on Monday. Bye, everybody.